Are you sick of losing money? Because I sure was. In the next 10 minutes, I'm going to teach you the exact strategy that I use to turn $25,000 into $100,000 in just 3 weeks. You'll need to know 3 simple steps, and I'm going to teach you exactly how to do it so that you can do it too. I've been trading now for 8 years, and this is by far the most profitable strategy I've come across. I've been using it for 2 years now consistently, and it happens every single week, and I prefer to use it on NQ and ES. It also works on Euro USD very well, but I prefer to use it on the indices or futures. It just seems to work the best. It happens every single week, and it usually happens between 9:30 a.m. and 11 a.m. Eastern time. So let's get into it. There's only 3 simple things you need to know how to do, and we're going to break it down here. So the first thing you need to know is what is SMT, and SMT is just basically when there's a crack in correlation between 2 assets. So if you put up a chart and you pull up NQ and you pull up ES and you overlap them like we're about to do. So if you go here and you pull up NAS, so right now we're looking at a NASDAQ chart, right? If we come up and we pull up an SPX 500 and we overlap them, you can see that they almost always sync together. So if we go to the hourly time frame, you can see when one goes up, the other one goes up. When one goes down, the other one goes down. They almost always move congruent with each other. So I'm going to go ahead and take this off. And I prefer to use the futures chart, but it's not necessary. You don't have to. You can just use the CFD chart. On the futures chart, you do have to pay, I think it's about $7 a month from TradingView, but it's not necessary. Some people will say it is, but it's not. So let's break it down what you need to know. So if we pretend this white line right here is an NQ chart. So we come down, we make a new low, we come up, push a high, and then we make a new low, break up, and come up from here. So this is an NQ chart. Now we're gonna draw right beside it, and we're gonna pretend that this is an ES chart. So we come down, we make a low, make a high, we fail to make a new low, which is the key part right here, and then we come up and we push up from there. So when we look at these 2 examples, which one looks like it is stronger? Well, you should have said it's this one, because if we look right here, you can see that there's a new low formed right here, right? And if we look on this example, there is no new low formed. So we have a higher high. So it tells us that there's inherent strength on ES. So if we're going to take a trade out of these 2 examples, we want to take the one on the right because there's strength in here. So it tells us that it's likely to go up over this one. They're both probably going to go up, but the one that's going to have more of a volatile big movement is the one that failed to make the new high or the new low. So this is an example for buys, and it's the same thing for sells, but I'll break it down really quick. So if we get rid of all this, you can see it's the same thing. If we come up, we make a high, we make a low, we make a higher high, and break down, what we're going to look for is we're going to look for ES to not make a new high. So if we come up, make a high like this, fail to make a new high, and then push down, it's the same thing. We're going to look for a trade example on this one because it fails to make a new high. So let's get down to it and break down some examples. And these are not just cherry pick trades. These are some of the exact trades that I took to flip my $25,000 into just under 100K. It's like $300 short of 100K in just 3 weeks. So let's break down this example. I'm going to switch back to the futures charts for the example, just because sometimes the highs and lows print slightly different. So if we look here, we're looking at ES futures. So if we compare the charts here, another thing you want to do is right here, you're going to put your charts either vertically like this or horizontally. So it's personal preference. I personally like to put them horizontally. It's just easier for me to see. It's how I've done all my back testing, but you can do it however the hell you want. So we're going to go vertically like this. We're going to make the bottom one NQ, and we'll make the top ES. So we can see here, if we look at this chart, what do you see? If we look at this line delineation right here, this dotted line where my cursor is, you can see this high here matches this high here, but we come up and we make a new high on NQ, but we fail to make a new high on ES. So what does that tell us? Well, we just went over it. It tells us that there's inherent weakness in ES. So what's going to be our focus if we're going to look for shorts? It's going to be ES. We're going to look to sell ES. So if we break it down and we look a little bit closer, what else can we see to confluence us with shorts? Well, for one, we have a level right here, just basic support and resistance, right? Resistance, 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 resistance. So it's fair to assume we're likely to see some type of bounce, right? So if we take a box as well, what is this? This is a nice, beautiful gap, right? We have a gap to the upside, gap on the downside. So it's a double gap. So when we come up into this zone, it's fair to assume we're going to see some type of reaction. Now, my chart is in New York time zone, military time. So 13 o'clock is not really a time for me to trade, but with everything coupled together, it means we're going to be looking for shorts for the next session. Of course, we're going to wait for some smaller time frame price action to confirm, but we'll get into that on the trade example. So if we look right here, you can see that this is the Asian range. If I pull up my box right here, my kill zones, all it does is it illustrates the Asian range. So you can see here, this blue box is the Asian range. We come up and let's dissect it on the smaller time frame. So this is that piece of price. This is that zone we're trading out of. And if we zoom in really close, what do we see? Well, we come up and we sweep this Asian high, right? So all the liquidity above that high is now taken. Now, if we zoom in with and compare it with NQ, let's see if we do the same thing, right? So we have this high right here coupled with this one, and right here we make a new high, but we make a new low here. So there's something funky happening with NQ. It's showing weakness, but on the higher time frame, ES is showing weakness. So let's break it down even more. Now, when we come up to retest inside that zone, look what happens here. We have a failure to make a new high on ES, right? See, these are just clean highs. It's actually just slightly below. If you really zoom in and look closely, you can see that it doesn't quite break above. It's just equal. It's like a perfect line with a ruler, which is fine. As long as it doesn't break above, then it's valid. So if we look at the same price right here, right, this lining up with this is making a new high while this is failing to. So that tells us that we're looking for shorts on ES. And now if we break it down even further, because right now we're on a 15-minute time frame, we break it down, ignore the yellow box. We'll get into that in another time. But if we look even closer, you can see we have a 5-minute break in structure right here. Price comes down, breaks structure. We come up and retest. My trade was just right here, taking it on the full block like this, and draw your risk to reward tool. Don't need to get too tight with your entries. It's fine. The stop loss is already small enough. And then you just target the lows. Because the stop loss is so small, it gives us a really good risk to reward. So we can target just this low right here, which gives us a 2.7R, which is completely fine. Imagine you're risking 1% on a funded account. You almost at 3% now. If you really wanted to get giggy with it, you could come down and try to take these lows. I'm not the biggest fan of always trying to go for home runs like that. I'm more of a basic kind of guy. You just get those 2-3 R's and it really adds up. So very beautiful example of a SMT setup. And we're going to break down one more on, I believe it was on NQ. So we'll go down to the 1 hour, or up to the 1 hour, I should say. So if we look at this example right here, this is another trade I took on it wasn't on this flip, but it was on a previous account. I just want to show you this example because it's just so textbook, cookie cutter clean. So if you look at the 4 hour, I'm going to draw a vertical line here just so we can easily find it. You can clearly see that we are bullish, right? The chart is going up. Let's not try to overcomplicate things. The chart's going up. Let's look to buy, right? We're making higher highs, making higher lows. We come up, we make a higher high again. We come take this high. That doesn't mean anything to me because we just come down and we make a new low right here, and it's showing no signs of weakness. So when we zoom in right here, you can see if we pull up an NQ chart, right? So I'll fix this one. If we pull up an NQ chart right at the same spot, it's very important that you always got to make sure you are on the same spot. So you can see here, we come down and we make a new low, right? So we come down, we make a new low here, but look what ES is doing. ES fails to make a new low. We make a new high here. So it's the exact same thing we just went over. There's showing that there's inherent strength in ES. So we're gonna look for trade opportunities on ES. So if I zoom in on ES, and we break it down on the smaller time frame, let's see if we can find something else, because you don't just want to take every SMT setup. You want there to be some type of confluence. And the reason the chart's like this is because I'm looking at the futures contract for 2025. So I'm going to go ahead and go to the SPX chart, which is the CFD chart, just so you can see it doesn't look like shit like that. So let's break it down on ES. Where are you? Great, so we'll get rid of this right here. And let's take a deeper look. I'll exit all this so we can go over it all again. So if you look and see, this is where the higher high was formed. So what can we find to give us some more confidence of a setup? Well, there's a nice order block right here. So price comes into this, right? Not only that, but if we look a little bit closer, you can see what time is this at right now? This is at 9:20. So the CME opens up at 9:30 a.m. Eastern time every single day. So when price rips violently the opposite way right before the open, that's a telltale that it's going to go and reverse, which is exactly what it did. You can see we have this block right here. We come down. Not only that, but we make this low. We have a gap right here, right? And an inverted FVG. If we go like this, right? We have a gap here, comes down, we blow up through it, and then we come up and retest it inside this zone. And not only that, but we have a 5-minute break of structure, and all this is happening right before the open at 9:30. This is screaming to you that it's going to reverse. And on top of that, what do we have right here? We have such clean highs that you can put a goddamn ruler across it. So setup was taken right here on the block. I had a little bit of drawdown on it. My stop loss was below the low and my target was these highs. A little bit unfortunate because it could have went much further, but like I said, I'm more about the base hits. I don't really care. You're not always going to catch the entire move every time. As long as you're catching a couple R, it doesn't even have to be every day. Every week you can make tons of money. So if we look at this setup even deeper, you can see once again the gap, we break up, market structure break, come retest that zone, take the trade, and bam. So very simple steps you want to look for. All you want to look for is relative highs or lows in the session between 9:30 a.m. Eastern time and 11 a.m. Eastern time. And then you want to look for a sweep of a high or low on ES and NQ and look for one of them to not do the same. Fail to make a new high or fail to make a new low. And then you're going to look to take that and just take it for 2-3R or the next major level of support resistance. And it's a very, very profitable strategy.